So we're gonna talk a little bit about uh manipulations. All right. And the importance of manipulations and how manipulations are starting they're starting a CO. Okay, so that's in the entry model, but it always comes up where people, and this is obviously a fault of mine, the fact that this is happening. I wasn't clear enough. But where are we here? Do we have a good example? People will start to, well, I guess we'll go on to 15, analyze or overanalyze structure all the time, right? So you're going to have people marking out ISPs here and not so much here where it's actually most important, right? Not that structure you shouldn't map all the time. Like, you should always be aware of structure. Generally, you should always be aware of where your swing points are. And if we are actually trending, that's when ISPs come into handy. But the way the structure system is really designed to work, or as how it developed over time, right? Because initially, I came up with it as a way to make structure less ambiguous, right? So basically less up in the air, less confusing, right? Where I didn't have to sit there and mark out structure, where's the structure break, right? Is it down here? Is it up here, right? So that was the original idea, and that's still the truth. But over time, I've learned that, and this is in the entry model again, but over time, I've learned that it's most effective after you've had a manipulation. Okay. So I don't think that I stressed enough how important manipulations are, not only to set direction, but also you can expect manipulations. There's so much. Okay, let's start. What are the important things about manipulation, or why is it important, right? First off, it's to set the direction for CO. Okay, that's the number one thing, right? That's the first thing that you should understand, that you should learn, because it's a necessity to executing the entry model. Okay. The second thing is power of three. So it can, and I know for a fact that I did not touch up on power of three enough in the course directly, okay? But over the calls, of course I did, but in the course, not enough. So it's important on the monthly, the weekly, the daily, and then you can even go further than that and apply power of three to an hourly candle, a 4-hour candle, and so on and so forth. Okay. So power of three is accumulation, manipulation, distribution, but it is with the intent of setting the low of the day, the low of the week, the low of the month, or high of the month, depending on the direction of the candle, of course. But we're just going to use bullish candles for this case. Okay. So we have a bullish candle. Power of three is open. Remember, we're talking about a bullish candle, okay? Open, so opening price, low, high, close, okay? But we're mostly just looking at this. Open, high, open, low, and then the distribution out that creates like the high and the low, okay? Because these are two parts that work together. But what happens here after the open, or before the open, is this is an area of generally accumulation of some sorts. Now, this accumulation can be built out at the open, or it can be an accumulation from an earlier date or time that will then be manipulated to set the low of the candle before distributing to set the high and the close. Okay. So does everybody understand exactly what power of three is on a basic level?
Yeah.
Okay.
Yeah.
Cool. This is important, like extremely, extremely important. If you don't have power of three, you literally don't have a trade. If you don't have manipulation, you don't have a trade, period. No ifs, ands, or buts. You cannot trade without a manipulation to anchor your bias to and your order flow to. Okay. There are now, okay. it gets difficult because after, having me said that, you might go into each and every day looking for a specific manipulation to happen. But the reality is markets aren't that clear. Okay. And manipulation doesn't have to happen every single day to the same extent as this. Okay. Or this. Right. That doesn't need to happen. There's also manipulations each and every session that can set the high of the session, the low of the session. Okay. If prices are not manipulating or distributing, they are doing what? There's only one other thing that prices can be doing. If they're not manipulating, if they're not distributing, what are they doing?
Accumulating.
They're accumulating orders. Absolutely. They're accumulating, they're creating liquidity on either side. Okay. So if price is not going in a direction, right? If it doesn't have an intent, it's not delivering in a way that we expect price to deliver in, right? It's not like our ISPs are breaking. This is generally a sign of a larger buildup of liquidity. Okay. So you need to understand that, and that's going to help you stay out of choppy garbage price action and just wait for the bigger move. Okay. Manipulations can take form in many shapes, similar to like our liquidity concepts. So generally, the liquidity concepts, the liquidity that we look for just in price like standard liquidity, not session based liquidity or like a PDH or PDL or something like that, right? Just regular old high, old low liquidity. Like this stuff is most effective in a trend. Okay. We put in that old high, we come down, manipulate. There's probably an FEG here, which happens literally right here. And then it rallies off. Like this is most effective in a trending market. Okay. And this is again where it gets difficult because there's intraday trends and then there's 4-hour trends, right? But you need to be keen, and this is essential to being a good trader and a good analyst, is you need to be keen on, first off, applying your narrative to multiple time frames. Okay. So imagine this is a 4-hour chart. I know it's a 15-minute, but just for this example, just imagine that it's a 4-hour chart. Okay. We have a 15 or a 4-hour zone here. And the reason I'm saying imagine this is a 4-hour chart, because I want you to get out of the idea that this is just in one session, okay? This could be over multiple sessions. It doesn't really matter because the concepts are the same. Imagine that this is a 4-hour POI and we're trending off and we had these big sweeps, right? We had some accumulation and manipulation. We had accumulation and a manipulation. And now we're starting to expand out of that range finally. And these are days ago. Right? These are days ago, maybe even a week ago or so, a couple weeks ago, right? Remember, these are 4-hour candles in this example. We've now started to trend, right, away from these manipulations, but there hasn't been any new manipulations, which is absolutely fine. We don't need that. We've already had them, right? We don't need this buildup of liquidity every time we move out of the market. We just need the one manipulation to really set the direction. And now we have this 4-hour FEG. Okay. And if I drop down into the lower time frames, I'm going to see if I can build a narrative around this FEG. Okay. Which I can. So now that I see this 4-hour, we're going to call it a 4-hour FEG. Is there a manipulation on the lower time frames that I can see that can be that manipulation for that day, for example, right? And if I went down a time frame, we could see that. Imagine this was like a 30-minute time frame or something. Price is pushed down, creates a low, creates a high, and then comes and sweeps that low, right? There's your manipulation. And then that sets a direction. That sets a direction. We can anchor our bias and prices rally off, right? So manipulations can happen on every single time frame, at within trends or out of trends, and then just continue trends. So what this is, right? This exact scenario, okay, we're going to just go back and call it a 15-minute because it is what it is. I just want to use the 4-hour as an example, that it doesn't need to be the 15 minutes. So you're breaking out of that idea where just because I'm teaching you something on one time frame doesn't mean it's necessary to that time frame, right? Like it's specific to that time frame. I mean, prices are fractal. It happens every price. I mean, on every time frame, all the time, every week, every month, right? It doesn't really matter. I just want to get you out of that idea right away. Time frames don't exist. All right. So why would price manipulate down here in an uptrend? Okay. This is a accumulation. This whole process is accumulation of breaking down, distributing, breaking down, distributing, right? Pushing back down, grabbing more orders. When prices in the middle of a trend push down, break an old low like this before continuing higher, this is a trap first off. This is getting people on the wrong side. You're going to see this as like a break structure. Some of us will see this as an SMB. We have to understand where the higher time frame bias is. But what this is doing is a reaccumulation. Okay. So you're going to get this deeper in the leg. Absolutely. So after the leg pushes off, you're going to get bullish order flow, but then we might hit something or prices might lose steam. When that happens, it'll want to run down, grab liquidity. We like to see that paired up with some kind of a POI, like mostly an FEG, right? This is all done for you with FEGs, by the way. And then rallies up in the opposite direction, taking out those highs that were set. And that's what inducement really is. Okay. These highs are induced. These sellers are brought into the market, tricked into the market. These guys are tricked into the market, and that creates liquidity, and that gets ran through to fuel as fuel for higher prices. Okay. This does not look like a manipulation on a higher time frame. It's just a simple tap of an FEG. But that is in and of itself oftentimes manipulation. And all you have to do is go to another time frame to confirm that. And if you see a manipulation, you are active with the entry model, right? So I was very patient in this case to take that trade. And this is the one I did the recap on. I was very, very patient to take this trade because I didn't get that original manipulation at the start of the day, right? I was thinking on the open, prices would rally back down here, maybe manipulate or manipulate lower. Instead, it didn't. It ripped up. Okay, that's fine. Now what do I have to do? I sit back and I waited for a new manipulation to occur, right? If I just got in with no manipulation and got in on this FEG here, would have gotten smoked, right? Would have gotten absolutely smoked trying to chase the 1 minute. Got wrecked, waited. We're going to favor the higher time frames all the time, right? Instead, waited for the manipulation to set the day's direction. I took that trade, got out here, and there's probably some trades as well in the PM session. If I look in here. So we sweep this, we sweep both lows, I believe. No, just the one. We sweep this low. It's not the cleanest. We sweep this low, and I believe I hope we retest that, otherwise would not take a trade. No, we don't even, yeah, kind of. It's not the cleanest thing. But we retest that. Let's see on the 3 minute. Is there a 1 candle that's clean? Yeah, okay. Not quite. Not the best like retest here, but we're filling that FEG. But either way, right? We're not going to get in here. We're going to wait for that displacement, right? You need the manipulation, then the displacement. And then when you get that, the reason why it's important is because it brings up your invalidation point by a ton, right? Currently it's here. When we finally get that manipulation, of course there's ISPs in here, but I'm just looking at the sweeps, okay? We get a sweep, we get a displacement. Now we have an invalidation point that's all the way up here, right? The importance of this is now you can take a trade with, well, now you could just take a trade period without having a stop that's 300 pips, right? So you have a nice invalidation point after the displacement. You know that prices should not come below here. If they do, you're wrong because that's what CO is. And then you can take a trade, get involved somewhere in here, maybe on these down close candles, right? And then rips off. Okay, cool. let's talk a little bit more of this because this goes super duper deep. We have every single session, okay? So sessions can be built up in ways to build up liquidity, okay? So another issue that I see a lot is the constant analysis of the left side of the chart to look for a draw on liquidity to take. And I'm not sure where this comes from, but everybody does it, or everybody has done it. Whoever doesn't do it anymore, every single person does it or has done it. Maybe it comes from the supply and demand times, but everybody will constantly be looking to the left side of the chart, like far left like this, to look for areas to manipulate, right? Or a draw on liquidity. So they'll be looking at something like this as a draw on liquidity to take a short, right? But that's not really how markets operate. Sometimes they do, absolutely, mostly in like a trending market. Like I can see that there's obviously liquidity here, but this is already in a trending market, right? And we can see that there's like liquidity here, right? Sure. But that's not the only way that a draw on liquidity can happen, right? Like your initial run on stops. It can also be a or a buildup of orders, an accumulation that happens during the sessions, right? So like Asia can accumulate and then London can manipulate and then New York can distribute. Okay. So we can have power of three like that as well. Or you can have Asia accumulates, London manipulates and distributes. And then New York can be your full on reversal. That can go take London high, for example. So you can have something like this. Accumulation, Asia. Manipulation, London. New York distribution. We can have Asia accumulates, London manipulates and distributes. And then you can have like a reversal on New York. New York also manipulating everything, distributing, right? There's so many different ways that this can take shape, but you have to understand it. And the only way to do that is through study. Okay. There's lots of study. Asia can accumulate. London can also accumulate. And then all this liquidity buildup, New York can manipulate and distribute, right? You have to be aware of what's happening in each and every session. So I know a lot of you guys are London time zone, right? So you'd be focused more so on Asia as well as yesterday's New York. Okay, you can't discount yesterday's New York. Oftentimes that will coincide with low of the day or high of the day, but you can't neglect that, right? Because there's a whole like after you get spread hours and then maybe in the PM session, you get another low here from New York, and New York's trending like this, right? And then you have like the previous days. Prices may want to run that low as liquidity. Oh, why the hell is my thing? Apparently I'm running out of time. Fuck. My Zoom is my card expired, I think. Fuck. I'm gonna have to end this call by Zoom and then come back to it. So I'll give it 10 minutes to just expire here. What the hell? Oh, I can do it right now. Give me a sec.
What stuff?
Yeah. Okay. So it can take shape in any form, but generally this is the idea, right? The idea is that, of course, okay, if you're trading indices, you're gonna want to trade indices like American indices during American hours, right? Right. If you're trading euro indices, you're gonna want to trade them during European hours. Okay. So you're gonna have different manipulations occur, but the main idea is that these manipulations are going to be built up before these big players in the market want to be involved. Okay. They need the liquidity first off to get in and out of positions. They're going to build these up before their trading hours, right? When they plan on doing business. So we got Asia, we got London, right? And then New York opens, right? And we may get a manipulation at New York Open, sets a low, and then rallies off of that, right? Something like that. This happens all the time. We'll take a look now. Okay, cool. Right. So we have London, Asian, London, and New York, right? So what's happened here, or we're looking at NQ. So most of the time you're going to see the big move happening on New York, but we'll go to Euro in a minute. Asia ranges. Right, this is off by a bit. It should actually be back towards 8 o'clock. So this would be the high, but it gets manipulated. And then the low gets manipulated throughout London, right? So that's expanding the initial range, right? If you take a step back further, Asian, London, and then this is New York. This is also New York. This is just PM session. Indicator doesn't understand that though. All gets ran during New York. And at the end of the day, it pushes up. So this is your manipulation to anchor your bias to, right? We already know that we're going up from here because we've had this manipulation. What happens here? Asia ranges. London starts to manipulate as we take the highs. And this is called an expansion, range expansion. And this is one of the signs of manipulation occurring is when we expand the range on both sides, right? So we're opening up the day's range and then we get that reversal, right? Obviously, we're not going to take the shorts from here, right? It's not in line with our bias. And this is also a trap, right? We're creating liquidity on the top side. Gets traders out, fools them into shorts with the false breakout, gets them involved here, pushes down further, stops above this high, stops above this high, stops above this high. Where does it manipulate into? Manipulates into the original earlier manipulation, right? So oftentimes you'll see price actually return to that manipulation, and that's what, you know, sweeping POI is, right? After that happens, price starts to finally push up, and now we start to see like our ISPs holding and that delivery, right? If I go on a 5-minute, you'll see that that's beautiful delivery playing out, right? All stemming from what the narrative was throughout the pre or the other sessions, right? And this is your power of 3. So the low of the day was set in London. Low of the day was set in London, and then it distributes. So you're having accumulation. You're having manipulation in London, so you can have distribution in New York, okay? Understanding this can help you to trade intraday, okay? So if you want to trade intraday, you absolutely need to understand AMD, power of 3, and session-based liquidity, like the engineering of liquidity, okay? So we don't have to look left all the time to try and identify what the hell we're rating, right? Like over here, for example, we look left, there's really nothing that it went to. What it did was it manipulated below all of this. Now, prices don't have to immediately reverse either. It can go down 10, 20 pips. That's still liquidity, right? Because people have different size stops. Stops aren't just below this low. They're down here, they're down here, they're down here. The further away you get, obviously you're going to get less stops, but most of them are right here, right? And then as we go lower, less and less stops, right? So it digs into that liquidity pool, pushes off, right? Over here, we're not looking for example, like pre-session, okay? Let's imagine that we were studying the chart from this point on, the end of the session, and we're looking for, like, let's say we did a pre-market review or a forecast, right? Where are we going to see liquidity over here? Over here? No, that's not really like That's not a manipulation, okay? If we just run these lows, it's not a manipulation. What a manipulation is a buildup of orders. You have to understand AMD. We can build out the accumulation beforehand to set up the manipulation and distribution. Like, I can't hammer it in enough. I have to repeat it 100 times. Manipulation, AMD, accumulation, manipulation, distribution. This can happen in a trend. It can happen pre-session. Asia, London, New York. It can happen London, and then it can even happen up here within New York, during New York, intraday it can happen, right? Let's say we had a higher time for POI right here. We could build up orders, right? So instead of looking left here, right, looking left and trying to find liquidity, you understand that there's liquidity above here. It's creating liquidity intraday. It sweeps it, pushes down. First entry possibility. After the break of structure, you get second entry, pushes down, taking out liquidity. Like, I can't force anybody to see this, right? It's just it's time in the market as a result of time in the market, but you need to learn it. Like, I can't stress it enough how important it is to understand manipulations aren't, or a draw on liquidity isn't just looking to the left side of the chart and trying to identify some random old high. Most of the time, it's better off to see the manipulation occur, the AMD occur. AMD, and this can happen on a damn 1 minute chart, right? Let me find a good example of that at a reversal point. There's a day I'm thinking of specifically, if I can. Intraday. Let's see this example right here. 15-minute chart. Yeah, let's look at this high here. Where did it come into? Nothing really especially clear, right? But there is an ISP here. Type 1 even, right? So we have a type 1. So we understand that this will get a reaction. However, what we want to see is a manipulation into that region, right? We want to see manipulations into our zones if we're not in CO, okay? If we are in CO, then yeah, we can kind of just trade them, put the stop above them. But if we're not, like here, we're kind of just chopping around, right? Pre-session builds up liquidity, right? Builds up liquidity, accumulation, manipulation, distribution. But what happens in here on a lower time frame? We see the exact same thing play out fractally. So zoom into this high here. Right before it reaches for that high, it accumulates. Puts in a low, a high, a low, building up orders above here. Stops are above here now. Okay. Price rallies up, taking those stops. And this is a good sign of manipulation, is it stops dead in its tracks. Stops dead in its tracks, pushes back down aggressively. Break structure, doesn't always need to break structure. That's the thing, right? As you develop as a trader, you're going to notice you don't really necessarily need the structure breaks to take trades. However, when you start, definitely, you're definitely going to want to pay attention to structure breaks to guide you. There's your manipulation as price rallies up above these highs. AMD, right? Same thing here. Accumulation, manipulation, distribution, right? It's happening intraday too. And that's how we create type 1s, right? I think the main reason I didn't teach it so much is because, well, it's built into the system, but it seems like a lot of people, a lot of you guys are struggling to find entries where you feel like you have to be so patient and you can't get involved. And I think that's especially if you're intraday trading, you shouldn't be missing so many trades. This thing delivers constantly, as long as you pay attention to where the manipulations are in the market, right? If you pay attention to where manipulations are, you can figure out where buy side liquidity is. You can trade to that. I can figure out how the hell do you go to your next candle? Built up equals here. What am I going to do now that we're in a pullback? I'm going to look for manipulation, right? I'm going to identify where type ones are, of course. Does it need to hit that? Absolutely not. I'm going to identify where. Okay, so we have type 1 here on the 15. We have an FEG. I'm going to look for manipulation. So what happens here? Prices accumulate, breaking the highs, creates liquidity down here, pushes down again, stops dead in its tracks as soon as we hit that POI, reverses, creates a type 1 right here. So now we have a type 1 as a result of a previous type 1. So now we've refined our invalidation point from here to here on this trade idea. And we can just follow suit. Right. And then we have internally another type 1 as prices sweep the low, breaks up, invalidation point moves from here to here. And now you have a trade like this using type 1s, right? You have the initial displacement. You return back to that range. Prices return back to that range into OTE. Again, accumulates, manipulates the low, and then pushes off, right? So now you have an entry right there. Beautiful. And you can take this entry up into this high. And if it wants to push down again, that's absolutely fine. Right. And now you're in CO. Okay. Stemming from an initial manipulation. Now we're actually in CO and we can trade this. Right now, whether this takes us out or not doesn't really matter, but it probably runs straight to take profit or close to it. What happens here internally? Prices push down. So this big push down, I feel like I've traded this. This big push down is also a reaccumulation. Comes back into this range. It's taking out some sellers. Yes, is this how we classify liquidity? Liquidity, absolutely not. But you do have to realize that this big push down is a reaccumulation of orders. Generally, we like to see that it breaks some structure because then you know that for a fact that it's manipulation. But just because it didn't happen here, right? And this is a perfect example of what I'm talking about, where you don't have to look at the left side of the chart to find liquidity. You can wait for it to be developed, right? We created this range. That range gets swept, right? We're setting these equals. That range gets swept. You're going to have to build the eye to see this stuff, especially in real time, because it's not always that clear. I know we have very specifically defined criteria for liquidity, but this is it. It's just on a smaller scale where we have those equals, put in a low, a high, a low, a higher high. Very important. Sweep that low, manipulate it, stops dead in its tracks, starts to push off, and again, back into CO, straight to the target. Right? All because we're anchoring that bias to these manipulations, which sets the direction of the trade. You have manipulation below all these lows, runs all these lows, manipulates, pushes up, creates liquidity, engineers liquidity. In the lunchtime hour, engineers liquidity to set equals here to get ran later, pushes back down. We're not just going to immediately look for a trade, right? Because now we know we're not in like CO in the direction we're looking for. So we're going to, again, look for manipulation. Manipulation occurs, stops dead in its tracks, creates a type 1, pushes up, reacts to that type 1. Inside of that type 1, we get another fractal manipulation as prices push up, attempts to create an ISP, pushes down, sweeps it, failed ISP. That failed ISP creates another type 1. That type 1 is respected beautifully 1, 2, 3 times. And that is bringing our invalidation point from down there to here, right? And then as this leaves, to here, and then to here as it sweeps this low, and so on and so forth, right? What we will... What do you mean a range? It is a range. Everything's a range. We have different types of ranges. We got dealing ranges. You got accumulation ranges. That's all. Accumulation range is literally just a range to build up liquidity on both sides. But you have to be specific with how you define things, right? Otherwise, you're gonna be haphazardly throwing words around, and then 1 day range is
I have a
one
question.
thing. 1 day range is another thing. Yeah.
One moment. When we start here, at what time you say this is a range? Oops. Yes.
What time
Also
am I? Do I?
it start here?
Am I sure that it's accumulation?
Yes. This is when you say this is a range. How many time it needs? How many candles that you decide this is a range? This is a question.
Okay, so yeah, that's actually a good question. So the reality of it is you have to develop the eye, right? That's just the reality of it. Okay. However, there are some things that you can do. So we're going to look for equals, and we're also going to look to apply the liquidity concept. So because in this case, we've created equals, right? We understand that that's a buildup of liquidity, right? Yes, this whole thing is technically a range, right? But we're looking more at the liquidity because we have to understand what reaccumulation is. Accumulation by definition means, at least in trading, the collection of orders. Okay. So the reintroduction of buy and sell orders. Okay. So in this case, we're going buys. So it's an accumulation. So a recollection of buying orders. In order for smart money to place their buy orders without having a crazy move in the market, they need equivalent sell orders, right? So they need to engineer that. And we do that, they do that through, well, we analyze it through, our liquidity concepts, right? So because we've put in a low and then a high and then a low and then a higher high, we've created those equals. We can see this as potentially liquidity, right? Now, I'm not saying put a stop, a buy here and then a stop right below here because we don't know for sure, right? However, when prices start to push out of this and start to respect, we may be interested in getting in over here, right? Over here, like as we break that high and we can create this a type 1, we can properly classify this as a new type 1, then we can be interested in it. And then we can be interested in it. Or even up here, we can be interested in it, right? We don't have to be involved at the manipulation, although that's always an option. But if it's not so clear, like in this case, we can analyze the delivery out of it to then confirm our suspicion that that is a manipulation, right? So if you can't define the accumulation range, wait for something that you suspect is manipulation and then confirm it with the delivery out of it, which would be like displacement and FEGs. If we can do that, then you can start to trail your stop to whatever the ISPs form, right?
Okay, understand. Thanks.
No problem. Any questions?
Yeah, what are the times for that PM session for futures? Where do you find that?
2 to 4.
Cool.
I like trading the lunchtime too, man. I trade 1 o'clock to there's macros. So weird. I don't want to get into that because that's a rabbit hole right now. But here's the thing you guys can use, okay? If you go to the announcements channel, I'm gonna repost it in the announcement channel so you guys can all use it. ICT index. This is an AI that helps you to ask questions for specific things if you don't know what they mean. Like if I'm talking, you can even have this open in the call, right? Or you can just ask me, I'll answer the questions, that's fine. But let's say it's the middle of the night or something, or in the morning and no one's on, you want a quick, snappy answer. I found this thing called ICT index where you can just type in, what is NWAG? When is the PM session? Right? So, let's see. It's 2 to 4 though. Like that's the hotspot. The 3 to 4 is power hour, so it's the end of the last hour of the trading day. And then 2 o'clock is like after lunch. but then you also literally have lunch, which can sometimes be tradable on the lower time frames. You usually have accumulation. PM session focus on relative values between noon and 3. Okay, there's your PM session, noon and 3. Realistically, it starts at, I guess, 1 to 3. Then you have power hour 3 to 4. So like everybody's going to give you a little bit of a different answer. But you can literally trade indices from 9:30 open. I usually don't take a trade until like 10 o'clock, 9:50, 9:50, 10 o'clock, just right before that silver bullet time. But then I'll trade that all the way up till about 3. I never trade after 3. My entries usually are around maybe 1, 2 o'clock or like 10, 11, I find for, indices. Obviously 4x after 12, sometimes you're shit out of luck, but it seems recently that prices have been delivering, past that time. Like here as well, even after 12, it just delivers all the way later into like 2 o'clock. Here as well, you got a deep pullback and just keeps delivering up until 2. And later as well. Any other questions? Regarding anything or AMD specifically, Power 3. I want all of you guys to build case studies around this stuff. Okay, build case studies. It doesn't have to be just session based. Okay, but there's all these different types. Okay, there's Power of 3. There's the weekly. There's monthly, weekly, daily, intraday, or I guess we'll call that session. All right. So session would be like any old high or low, right? That accumulate, manipulates, distributes, right? That would be like intra-session. So this manipulation occurring just at the high of New York. Now, this is important because oftentimes what can happen is the one that sets the high of the session may also be the one that sets the high of the day, right? So that intra-session sweep, right? So here, these are all, whatever manipulation occurs in here is specific to this session. However, let's find another case. Here, for example, New York sweeps liquidity above both previous sessions, and that sets the high of the day. So you're getting the PO3 for the session of New York, but you're also getting the PO3 for the day, right? So you're getting the accumulation, manipulation, distribution, not clean, of course, but it is what it is. Here's another case. Accumulation, manipulation, distribution, right? Sets the low of the day, also sets the low of the session, right? It's also Monday. So it's also at the same time setting the low of the week. So that's the power of 3 for the whole week, right? So you can have them crossing over and working together to do the same thing, okay? Power of 3 for the week. So the low of the week, for example, in a buying week, a bullish weekly candle, happens generally between Tuesday's London session and Wednesday's New York. Okay, so the highest probability low of the week or high of the week is between Tuesday's London session, Wednesday's New York. Okay, so usually that's where the manipulation occurs. Monday is accumulation. Between Tuesday and Wednesday, oftentimes is manipulation. And then the rest of the week is distributing. And then Friday is usually a pullback of that distribution. So you get Wednesday and Thursday distribution, and then Friday usually pulls back. Right. So oftentimes if you have a very bullish week, Friday you can actually trade and try and fade a little bit of that move to get a good sell on or buy if it's a sell week. Is there anything I'm missing? So I want you to build case studies, post them in the group about manipulations that are occurring intraday. I want you to post about manipulations that are, and I want you to do really detailed case studies. And if you need, I'll pull up Brian's case studies. Brian did absolutely fantastic case studies on Power of 3 and like understanding the development of daily candles. Brian, you know what I'm talking about?
I remember them. The ones that are where
Yo,
you have
yeah.
Yeah, you
Yeah.
remember what I'm talking
Yeah, I
about?
got them somewhere. Oh yeah,
Yeah, how did those help you out with like reading price?
definitely helped out, man. Like it clears up everything. You can see how it all plays out properly.
Okay, cool,
It's-
cool, cool.
it's
Can you
definitely
are you able to like pull up something because those case studies were absolutely perfect.
okay?
You think you
Give
could
me
pull
a
some of those up? Not right
give
now,
me a
but like
moment.
just put, you can throw them in the chat after.
All right.
Right. So just use you as an example for these guys about like what a really good case study should look like. And then I want you
Yeah.
guys to build similar things on whatever pair. It doesn't really matter. Just have it on every single pair and just really start to understand how like sessions develop, how a daily candle develops, and the overall trading day develops with the manipulations and the delivery, the power of 3 to set the low and the high of the day, right? At what times, even you can even go a step further and figure out what times these manipulations tend to occur. Like I know that. And again, if you have questions like this, ask me, right? The more you start to think and dive into it, you get better quality questions, right? Initially, you're asking, what the hell is an ISP? And then you start asking, you know, what is a manipulation? And then you start to dive into these more refined concepts, right? Of, okay, there's a manipulation. How do I know when a manipulation is going to occur? Okay, what times of day do these manipulations tend to occur? Like you ask me that question, I can give you good answers, but I can't give you good answers if you don't ask me questions, guys, right? That's what I'm here for. So ask me questions. If you think that it's a stupid question, ask it anyways, because there are no stupid questions. If you want to go on your own whim and just do study yourself, I push you guys to do that too, right? Like I am not the only person that you can learn from. There are people that are way smarter than me, right? But what you're getting from me is you're getting all of the stuff that I learned packaged in a nice way, and you're getting instant access to me. But if you want to go and dive deep and go watch a freaking 2-hour webinar from ICT, there's tons of good information in there, but you also have to listen to them rant and sometimes cry. You know what I mean? So it's pros and cons to that, right? But I seriously, like, I encourage you guys to go and do that, right? To learn from other sources. And I say it all the time. When you're doing that, I want you to look at it through the lens of like our system with the ISPs and the SMBs and stuff, right? Because that's really what helps you to like piece it all together and not have all of this new information that's confusing. Right? Like that is a really good way to learn outside of, you know, what we're doing here. I encourage you guys to do that. I'm not going to say, hey, I'm the only person you can learn from. That's just stupid, right? You can always have multiple sources in business, in anything, right? You're always going to have multiple people you're learning from. It's never just one area that you're going to get absolutely everything from. Everyone learns in different ways. Everyone likes to see different perspectives, right? And the more perspectives that you get, you know, depending on who you are, that can really help you, right? And I'll just go out and say a lot of the guys in our community, I think Kim and Johnny especially are looking at Arjo on YouTube, and he's really good. Do I agree with everything that he does? I've watched a few of his videos. Yeah. No, absolutely not. But a lot of the things that he teaches or other ICT traders are just applicable to our strategy. We explain a lot of the same concepts in different ways, but sometimes you need that perspective shift to make like that breakthrough of understanding a certain concept. So like I'm 100% not against you guys going out and learning from other sources. Like absolutely not. You get everything you need here, absolutely, but sometimes you need a little bit of a perspective shift. Another thing you can do is if you have simple questions that are related to ICT concepts, like what is an NWOG, new week opening gap? What is a volume imbalance? You can jump into ICT Intex and ask them. Like you're not going to get answers on ISPs, so that's our thing. You're not going to get answers on type 1s or type 2s or CO, like that's all our stuff, right? Yeah, I mean, you're not going to get any information on that outside of here, right? I think that's about it.